Welcome to Momentum Monday. Today is August 25th, 2024. The markets, at least the S&P 500, is back near all-time highs. Howard, did you expect the market to bounce back so quickly?
I just never like making predictions because I've learned to just, well, I mean, it's fun to do it, but I just didn't predict this, never predict any of this stuff. Well, I can tell you, as we did when VIX was at 60, that it was worth trying to buy stocks. Now that we've got the VIX calmed right back down, you got to go back into what we do here weekly, which is like just going through you can hear me, right?
Yeah, I can hear you perfect.
But just following what we're seeing. And I mean, what the VIX 60 did do for us, including with Trump. I mean, on August 5th, he was saying, we're crashing and this is all. I mean, really, you really have to separate who really puts in the work versus who's yelling and screaming. And I think you probably won't get another short-term chance like we did with VIX 60. But like we said, when the VIX was 60 on August 5th, it didn't seem like there was much pain. But the setups, home building, housing, insurance, financials, tech,
Biotech,
industrials,
grids everywhere, yeah.
So again, well, I don't know where the market goes. Gold, crypto. I don't know where the market goes, but I'll tell you the only thing I'm concerned about. So let's pull up, the Fed capitulated, they're going to cut rates, right? So why are they going to cut rates? Okay, so that's a real question. I was reading Rom's great piece because Rom's just at Lumida, and he's talking about the real rates pushing up against 2%. And when the Fed has not reacted over the last 50, 60 years, when the real rates get to 2%, some stock market drama and crashes have been known to happen. So why are they doing this? I mean, I guess they're looking at some data that rest of us aren't really day-to-day looking at, right? And so the question becomes, why do they need to do it, right? It's not like the markets, if we go look at the S&P, it's not like 5% T-bill rates have been the right place to be, right? And I'm guilty of being high cash too, just because I don't need to make outlandish returns. But that has not been the place to be. The place to be is long, the NASDAQ, right? And so the question is, the one thing I liked about high rates, even though it didn't help me in my core business, was it made people like rethink the stupidity and get capital allocations properly. Like maybe you shouldn't be able to raise money. And so I think what worries me about the rate cut cycle is, has anybody learned anything? And like, we need to get capital pushed in the right direction, be it the right energy, the right technology. And so I worry about that from a macro, but game on, right? Like historically, the first rate cut has not been good for the market. It's really when they're finished rate cuts or, at the tail end of rate cutting that the markets really take off. So again, history books, I don't really know what they say here. I can only follow the price action, and the price action's good.
Yeah, for the most part, and you're right, when the VIX is 60, typically you have two scenarios. It's either an incredible buying opportunity, which is 99% of the case, or there is a big crash behind it. And in most cases, it's just worth really buying that dip, obviously always with a stop loss. And in the past few weeks, we saw a tremendous bounce and a recovery near all-time highs, near 52-week highs for the major indices. And then the major theme in the past week or so has been a rate cut rotation. All of those sectors that are the most interest rate sensitive, like regional banks, financial institutions, home builders, biotech, all those groups that were hit the worst in 2022 when the Fed was raising rates, they are now outperforming. Here's the home builders index near, I think that might be all-time high. At all-time high,
Oh
and
my goodness.
last week the best performing stock was Redfin. It was like 40% or something for the week.
Oh my goodness. So where did Zillow do the same thing?
Zillow is a little bit more richly valued, so they're not moving as fast and not as
Good
shorted
setup.
as Redfin. But
Setup.
yes, it could be a good setup here. And as I said, regional banks, super hot, biotech, setting up for a potential breakout here near 103, 104. And if you can see here on a monthly, they were rejected near their, this is their, I think, 50-month moving average. So they had a big rejection here and 20% pullback from their 50-month.
So which one's equal weight, buddy? Which one's IBB or XP? Which one's equal weight?
This one is, I mean, none of them is equal weight, but this one has better representations of more stocks, a lot better than IBB.
IBB?
So this one is definitely a better representation. So now it's back to the 50-month moving average. So I'm thinking if it manages to really start trading above it, we could see like a 20% move
easy
quickly.
Yeah. Yep. So that's a good idea. And they're also just going to benefit. I mean, if you think about what's really going to benefit from AI, it's it's financial industry. Think about the amount of people. Like I think about StockTwits, Ivan, and how different we are from when you started there. What we can do in video, what we can do in moderation. I mean, the size of the company is the same as it was 10 years ago, and revenues can be 4 times what they were in terms of people to revenue. So, and I think of, like I said, yeah, easily profitable because you're only 40 people. But let's go to Netflix, Spotify, for example, same thing. They can continue they are the biggest beneficiaries of cost of AI because of learning what you want and having better customer support with less people, right? And there's just no competition for these two. Again, I don't know how to value these companies, and obviously the right time to buy them is, 300% ago. But I mean, how do you just can't play catch up to these? So you're looking for unique data plays, and this is why I go to the financial industry. ICE, and I've been writing about it a lot, but if you go to ICE, CBOE, CME, these companies have such tailwinds behind them because they can continue to take out costs, and their services are just so needed. CME has been the laggard. I think NASDAQ also. Yeah, CBOE and ICE I own, and I'm looking at NASDAQ. And NASDAQ's really about to break out there if we go to a monthly. So these companies all have tremendous leverage because more people than ever are trading on top of the systems globally, and they can continue to lower headcount and get efficient. And CBO obviously because of the options. I mean, the inside information I have here is you just go look at Robinhood and you go look at Alpaca and you just go, what do people want to trade? The younger people options. And
I mean, yeah, most people have smaller accounts and
here's a company. What's the valuation? $20 billion. This is a tiny company in a world of options. So again, historically, no one follows this. It's a tiny valuation for the amount of global, business that they do. And again, I haven't studied the true fundamentals here, but from the price, this is why I'm long in my degenerate ETF. In a world that from Turkey to Saudi Arabia, where young people are investing and people want access, and people can learn to do this and follow socially. It's these companies that have systems and networks globally, like Netflix, CBOE, Spotify, that will continue to benefit from AI. So I don't think you have to be so fancy and go into biotech and stuff you don't really understand. But of course, in the biotech, like you said, if you can trade it right, I think if it breaks, it goes up 20%.
Yeah, I mean, don't need to pick individual biotechs where you have a huge gap risk. You can just go with an ETF, obviously, if
And
it
we,
becomes a hot space again.
and again, I'm pounding the table for the last, I don't know, for 100 and some points on Goldman. Again, no competition. IPO market's been for shit, and the stock's at all-time high. When the IPO market returns, it's Goldman, JP Morgan, Morgan Stanley. It's three banks that are going to benefit, right? And so,
Look, there are a
like
lot, there are a
you
lot
don't have
of
to get fancy.
there are many bullish arguments, obviously, many different sectors working and setting up. But it's not all, flowers and rainbows. Last week we saw the mega cap tech stocks were a bit weaker, showing relative weakness. That doesn't really mean going down, but it could mean just going sideways. And I just noticed that
But but
the
just like when the banks, like we could be going into a period where both governments become tech unfriendly, and it won't stop people from trading. It won't stop people from
absolutely,
buying
yeah.
homes. So I'm saying there's this rotation going on, which is it's somewhat no one wants to believe because they're used to looking at the same stocks. I think you
Yeah,
have to
the
get,
same 10 names or so, but it could be
yeah,
a healthy rotation. What I'm saying that is, I mean, I know that a lot of people don't like hearing that and don't like macro, but the Japanese yen is rallying again, and that's the same thing that caused that tech sell-off in like from mid-July to early August. It's
mhm,
happening again, so I would keep an eye on that. It might have an
yeah,
impact on big tech, and if big tech has issues, the large cap indices are going to have issues. And this is, just another reason why we might see that rotation into smaller caps and some other areas of the market. So there is something for everyone in this
yeah.
stage.
The small caps do look good. IWM, right? Like,
Yeah, IWM had a big bounce. They're definitely outperforming.
and it bounced where it needed to and
Yeah,
quickly.
this is a
So
monthly chart. This is a weekly. So I mean, they've been underperforming for such a long time, and now it might be their time to shine. We will see if this is the case, but yes, definitely on Friday they outperformed significantly and close near the highs alongside regional banks, biotech, home builders.
yeah.
So there's some rotation going on, and back in November of 2023, when the Fed hinted for the first time that they might be done raising rates, these are exactly the three sectors that powered higher and outperformed home builders, regional banks, biotech.
Mm.
I mean, tech was also
Mhm.
going up, but much lower much lower pace. And so now we're seeing the same thing. Now that on Friday officially Powell admitted that it's time for a policy change, those three sectors are again outperforming also, alongside Bitcoin and gold. Since the
Mhm.
US dollar is completely crashing, rates are crashing. So these are all typically
Is that the US
tailwinds.
dollar?
This is the US dollar. Yeah,
Pretty big move. It's
it's been
still in a
pulling back.
range, but pretty big move. Yeah.
It's been pulling back, and rates also have been pulling back as the market is trading in anticipation of what is likely to happen and in the near future. So yeah, is there anything you're buying right now, or you just
No, listen, I think everything that I love, Goldman, Axon, stuff that I've been talking about for months, and it's just extended. Um, and then I did a little buying during the VIX 60, not enough. But I mean, Nvidia's earnings are this week. There's
yeah?
nobody that doesn't think it'll be a huge number. So I don't want to trade in front of that number. I don't think they're going to surprise to the downside. It's just a question of what's priced in. Um, the so I don't know. It's going to be a fun week to watch Nvidia because it really is
It has a big
kind of a
impact
monopoly.
on the semiconductor sector in
They're making
general.
everybody chase. Like AMD had to do that big acquisition. I was listening to I talk to Michael every week on Trends with Friends, and you listen to Gavin Baker, and you listen to a lot of smart semi people, and semiconductors for me. The more I listen, it's just too technical for me, right? But what I can tell from NVIDIA is they just have such a lead, through corp dev and through just their own products that and really what's in their favor, as we keep talking about, is their customers can afford to pay from Facebook, on down the line. Their customers have just cash rich balance sheets. So it's not like 1999, I keep saying, where Cisco's customers were all startups and would go broke. So NVIDIA doesn't have that like 1999 bubble kind of customer base. But again, orders can get pulled, right? As soon, if the economy slows down, orders get pulled. So that's this week, but I think we're at the tail end of earnings, aren't we?
Yeah, we're towards the end. Typically, earnings season ends with retailers, and it's been a mixed picture so far. I mean, we've seen quite a few positive market surprises, but like the market has been like selling some of those gaps. Like, you can see Target gap up and then sell off. I mean, Walmart on the opposite spectrum, gap and go.
Yeah, Walmart looks. What is Shopify? I own some Shopify. Is that just
Shopify,
kind of...
they also gapped up on earnings, and it's been slowly trending and actually, building, acting constructively. So e-commerce has been strong, and probably the weakest e-commerce
But
has been
still
Amazon.
trading 70 times earnings. Yeah. So again, I don't think everything's working, but a lot's working. And then
Definitely. I mean, that's what I'm saying. It's a market of stocks. You need to pick your spots and your stocks.
and now there's, you also have the bad government bet, which is, gold, Bitcoin. So it's just a bet on bad government, and seems like the safest bet, safest bet of all. And I got to tell you, man, like every day that goes by that they don't find a hole in Ozempic in these drugs, keep finding new use cases for it, right? And as the degenerate economy continues, and people have gambling problems, and they have vaping problems, and they have eating problems, look at that trend. Like we're talking about since 21, it hasn't gone below the two, other than for like a month or two.
Week or two, definitely, yeah.
We have not seen a breach of the 200-day moving average. It's just every dip has been bought.
And this is
do you ever hear
50-month.
CNBC? Like I don't listen to CNBC. Do you ever hear mainstream media talking about this other than, it's going to kill people? So again, it's just one of those drugs that the other shoe has not dropped. In fact, Eli Lilly continues to launch stuff, and the drug seems to have more use cases each and every day. But wow, congrats! And this is why, again, my index, like I wouldn't have held this.
I mean, incredible, like from like 40 to 1,000.
It's almost $1 trillion.
In
so it's
in
gone.
12 years. And if you ever read about, how people make money in those weight loss stocks in mass media, this will be your sign to sell.
Well, no, because I honestly think it's misunderstood. Like if we look at what all the companies that have been built to help you do weight loss, from Weight Watchers on down, the billions of dollars spent, and as expensive as this drug is, wouldn't you know?
Yeah, Weight Watchers seems done. They seem done. I mean,
I'm just saying it's still $100 million, but it was, multi-billion, I don't know, 5-10 billion
at some point,
company.
Yeah.
So that all has gone to Eli Lilly. So and then you got Novartis, and you've got Novo Nordisk. And I think it's NVS, which is
NVS, do they have a weight loss?
No, maybe they don't, but the stock looks great. I forget what they do.
Yeah.
Ethical drugs. But look at that. And that's a Swiss company.
Generic pharmaceuticals. Yeah.
Yeah, so it's a Swiss company. And if you look at the Swiss, it's a perfect time to be Swiss, because you got financial, insurance, drugs. ILF is the Swiss market. in their
IOF?
ETF, just IL.
Oh,
For some
IOF.
reason, I don't know what
No,
it stands
IOF,
for.
that's South America, Howard.
Hang on.
Switzerland, I think
So
it's IWZ maybe? No,
EWL, EWL.
EWL, yeah.
So look at Switzerland right here.
Yeah, it's
So
a slow mover, but yeah.
no, but I'm saying you can see there's no tech, right? It's healthcare, financials, UBS, industrials, drugs. So you know, this rotation out of FANG is not bad for everybody, right? So anyways, that's it. I think you got to just pick your spots here, right? Like, you know, you've had a great opportunity at Big 60 to try a few things, and now, you know.
Yeah,
you're definitely
now definitely the correlations are going to drop, and they're already lower than they were a few weeks ago.
What do you do?
I mean, I own some regional banks. I own home builders. I own some NVIDIA. I'll probably sell most of it ahead of earnings. I own some biotech, and I'm looking to add if it acts properly. That's about it as of now. And obviously looking for some short-term speculative swings. You know, it could be anything highly shorted, let's say for solar. I mean, the sector has been a huge laggard for so long, and now it's starting to bounce. It's highly shorted. If it happens, you know, there could be a bounce here. This is one of the better looking solar stock. Like look at Run, big breakout last week. Nova. These are all highly shorted names. So a lot of the highly shorted names, they've been laggards, and we might see
So why is
short-term.
that, do you think? Why do you think that is?
Just highly shorted and just rotation out of
Yeah, a
big
few
tech.
times a year, these
So
people get caught in these, right?
I'm talking
Yeah.
short term, not long term. Long term, I don't know what's going on with those businesses, but short term, when they're highly shorted and when we have that rotation, they can pop. I mean, as we saw in Redfin, they were up 40% last week alone, and they're 4 days of short interest, I guess, not that high. Some of the smaller weight loss stocks, you know, there's a constant talk about acquisitions in the space. I mean, they're not making any money, but you know, they're trading based on expectations that someone might acquire them. You know, they could be good short-term trading vehicles like this one, VKTX, or the other one, TERN. It could be
You find
short-term
all
pops.
these.
Short-term
Okay.
pops.
All right. Well, the good news is you survived VIX 60. You kind of didn't panic.
I mean, yeah, we're entering pre-elections, and as I said, I don't remember elections before being so close. So at some point, the market could become a little bit jittery, and we might see some pre-election volatility. That's about it. It's not going to be easy, as you saw last week. I mean, we had like a huge sell-off on Thursday, and then the big bounce the next day. So there's definitely volatility is still here, even though VIX has gone down a lot on a day-to-day basis. We're seeing a lot of, you know, shakeouts.
Yeah. Okay, buddy.
All right, Howard.
We'll see everybody next week.
See you next week.